Hello and welcome. You're watching In Your Interest. I am Shweta Kothari. India's antitrust body, the Competition Commission of India, has reached an initial assessment that the $8.5 billion merger of Reliance and Walt Disney media assets in India harms competition. The main concern revolves around the combined entity's control over cricket broadcasting rights. Now, this marks the most significant hurdle to date for the planned Disney-Reliance merger, which aims to create the largest entertainment company in India. The $8.5 billion merger, which was announced in February of 2024, aims to combine the two media giants into what would be the largest entertainment conglomerate in India, a move that could reshape country's media and entertainment landscape. However, the merger's potential to impact competition has raised significant concerns, leading to CCI closely examining its implication. What does it really mean for the merger going forward? Let's understand that. Joining us on the show is Srinath Sridharan. He's a policy researcher, corporate advisor. Srinath, good to have you back on the show. What are we making of what's coming out of CCI? We know that there is an initial hurdle, and that is with respect to the broadcasting rights for cricket. Do you think the merger will go through as planned?
Shweta, I think it's a double-edged sword, right? I mean, if you stall it, how are you going to break up this entire merger? Because the sore point seems to be cricket, and the rights actually fall off in 2027. And I think the entities will be very fair to say that they can't even hive off these revenues to any other bidders. That's a reality. Two, I think very interestingly, we'll have to look at this. If not them, who will buy it? And I'm saying an academic interest. What stops friendly entities from being parked with some of these assets? And once some of these terms of the approval are met, over a point in time, consolidation happen again. And this is something that we've seen play out in India. So can CCI truly be independent and hold fort? Or is it just optics around the process of all of this? And if I chat with some of the market analysts, I think that they seem to be talking about the latter, discounting the fact that this is actually a very, very severe or serious regulatory concern. And it looks like the market punters are saying that it is probably more optics, and the deal will come through. Probably some parts here and there that the entities will give up, but friendly assets will be parked with others.
Okay, optics at best, and I think that is what we're reading into it. But we're given to understand CCI has raised about 100 questions, and the most pertinent to which is the cricket broadcasting rights, both the streaming on TV as well as streaming otherwise, both of which will expire by 2027 and 2028. So it becomes therefore incumbent upon these two entities to keep broadcasting cricket up until that point. Do you think that, that is going to be a sore reason why perhaps CCI will be holding the merger to go through up until then? The fact that these licenses cannot be sub-licensed as well, because this will create another hurdle with cricket broadcasting in India. So what is the road ahead, if I may ask, if that is going to stand out as a sore only reason for the merger to not go through? What can these two entities really do to shave off some of these concerns?
Theoretically, even if you were to hive off the cricketing assets, who are the other buyers and at what price? I mean, they can't match this current bid. That's the very fact that these entities are holding it on. And two, the very fact that cricketing assets watch for free as a strategy is to also hook the consumer onto this platform. And will let's say this merged or to be merged entity give up that right where they want to actually grab the eyeball and probably the later wallet of the consumers? The reality is, in India, we are a cricket crazy nation, and giving cricket for free is a sure shot hook for us to probably surrender our airtime, data, everything to the platform. And so I think they're not going to give in so easily, the entity. Okay. And this is one of the largest conglomerate or the largest conglomerate in India. So can the regulatory authority really dig in their heels? I kind of doubt it. And this is why I'm probably looking at what the markets are saying. This is a mere optics or the process of it.
All right. And let's say the merger does go through. Data suggests that the combined merged entity will control about 40% of advertising market. it's a serious concern for those who want to advertise, especially during cricket matches and for audience at large, when it comes to competition in India. Let's say both parties agree to give up on some of those concessions and make some concessions which makes CCI happy. But looks like at the end of it, it's going to be the advertisers and people like you and me who will be sore losers.
So that's true, Shweta, but we're discounting the fact that a lot of other industries already have that kind of monopoly, right? I mean, telecom, for example, near duopoly. Airline industry, if you're talking about, let's say, airline industry, there are only 3 airlines today. And if you're talking about premium segment, discounting the fact that Indigo will have business class soon, it is actually only one single, the Tata entities which offer business class. So there we are seeing in a variety of markets, let's say PVR, Inox, again, brute market share in multiplexes. So a lot of industries, we already have plethora of near monopoly, so to speak. And so this kind of is, this decision of CCI for this will also probably open a Pandora's box for other industries.
Okay, and let's for one instance assume that there will be more concessions, discussions, negotiations between the two parties and the CCI. What could come by the way of those concessions right now? What are you hoping that both the parties will give up on in order to retain those cricket broadcasting rights?
I mean, if I were to speculate, I think will the Indian entity benefit from reduced discounted valuation so that the foreign party gives in to the Indian party to make this deal follow? Probably yes. I mean, I'm thinking like an Indian businessman here. And 2, I think even if they have to hive off a couple of channels to other potential buyers, I think except for cricket, they will be very willing to give up some other channels out of 120 channels, give up channels to, I'm saying, friendly owners who will buy it, either warehouse it for them or actually buy it at its valuation. And I think both these options are open, but I don't think they can afford to give up cricket, which is one of a prime strategy for this. And I don't see this entire thing only about cricket. I think I see this bouquet of platforms that they will offer as the consumption economy model, that they want us to, whatever we think of media and entertainment, go to one platform, which is Viacom, Disney, so to speak. And I think that's the largest strategy. And the loss leaders, cricket could be a loss leader for them over a point in time. Just imagine I'm extending the thinking process. What if India actually hosts the Olympic 10 years from now, and we see one of the promoter is actually on the the Olympic Association member. And what if India bids for Olympics and hosts it? This is the platform which is going to probably benefit for bidding for those Olympic telecasts globally, right?
Absolutely.
So I think it's a long-term strategy for them, for media and entertainment business. Don't look at it as short-term cricket. I mean, that's only the revenue, but the revenue could be a loss leader for a long-term game.
Absolutely. There is a long-term game at play, not just competing with the likes of Amazons and Netflixes, but also competing with Z's and Sony's in India. And talking about Z and Sony, we talked about that merger for a very long time until it fell through. It faced similar sort of hurdles in 2022. Those hurdles, of course, when one is working through them, looks like could have some impact on the merger. That merger did not go through. Do you think this hurdle posed by CCI right now in form of questions, in form of saying that this is going to harm, competition, especially when it comes to cricket broadcasting, could impact the merger process?
No. Shweta, this is my view. If an Indian conglomerate or a large entity which is important for not just the market or the economy, the consumers, and for the policymakers, if they want a deal to go in a certain way, my belief is it will. They might have concessions for optics, but it will go through for the simple fact. I think we also have to respect that domestic consumption would also need domestic protection. If the US government is lobbying on behalf of, let's say, the big tech or Disney or whatever, why should Indian government or the Indian bureaucracy not actually protect the interests of Indian conglomerates? So I think we also have to look at it from that perspective. If we open our doors and allow for foreign entities to take over much of the market share, especially when the consumption is growing, we are going to be in trouble much, much later. So I think look at it from a strategic trade-off point of view. Indian entities, large ones, will have a way to get going on this. But I think it's, as the Chinese or the Japanese would call this, they would be face savers for all parties concerned.
Okay, and before I let you go, we are given to understand cricket broadcasting, of course, is one bone of contention. There are other reasons as to why the merger is being put to questions and being scrutinized by CCI as we speak with respect to how it will impact competition in other media segments. What are these other media segments that could have a potential impact in your assessment, Srinath, before I let you go? As a result of the merger going through, what other segments are we likely to see some impact on, at least when it comes to smaller players operating in those segments?
See, smaller players cannot claim that, let's say, the entertainment segment could hurt them because there are quite a dime a dozen, and if you split them into various regional language buckets, then you will not have a monopoly at all. News today, again, is very, very fragmented. It is sports and OTT, especially the likes of Netflix and Amazon Prime, which have a large monopoly. The India, we have an advantage. Anybody who plays the linguistic card can actually break any monopoly rule to say that we are not a monopoly because we're a different language. We cater to a different audience. And I think, but for cricket, we don't have much of large market share at all. But if you club all of them, 40%, is it large? I think look at other industries, probably it is not large. And I think the real nature is what controls or levers will CCI or the government have tomorrow for pricing control for consumers. That's a larger challenge.
And I think that is something that will really affect people at large, come to think of it. They may not be concerned with the merger, but they will definitely be concerned when suddenly there is a hike with respect to, viewing channels and viewing platforms and streaming platforms. I think that was likely to bother consumers more. And that is something I think CCI will also have to look into going forward. Those concerns have been raised by CCI, and there is some time before the merged entity really comes to fruition. But for now, both the entities will have to respond to CCI within a stipulated timeline. Srinath, thank you very much for taking time out. Thank you for putting this into context for our viewers. We're of course tracking that story very, very closely here on News 9 Live. But it's time for a short break here. We'll be back in just a bit.